What's up, guys? Welcome back to DCA. So what we're going to do in this video is go over Chainlink again. Now on June 7th, Chainlink released the roadmap for Chainlink staking. Now, if you don't know why that's important, or if you don't really know what Chainlink even is, I've made a video where I've gone extraordinarily in-depth into Chainlink staking and essentially why Chainlink is so important to the entire cryptocurrency asset class. So essentially, just to give a brief synopsis, because I'm not going to go into that whole thing again in this video, we're going to do a price analysis today. But in that video, we talked about the fact that Chainlink is not really a retail investor token. There is no real use case at the moment anyway for Chainlink for the retail investor. Now, when Chainlink staking comes out, that will change in that you will be able to stake the Link token. But the Chainlink token, Link, is used in order to pay node operators for providing data services, okay? That makes Chainlink one of the most misunderstood assets in this entire asset class. So if you have a DeFi protocol, for instance, and you're relying on accurate price feeds, you need Chainlink, okay? There are some other Oracle protocols out there, but at the end of the day, Chainlink has such a stranglehold on the asset class that there are really no competitors to speak of. And I'll show you some metrics that sort of support this later in the video. So when Chainlink staking comes out, it's going to be a game changer. And that's primarily for the fact that at the moment, node operators, and these are the operators providing data services to DeFi protocols, for instance, these node operators are currently being judged on how fast and how accurate the data that they're providing is. In the future, when Chainlink staking comes out, there will be an additional layer to that, and that will be how large of a stake do you have in the Chainlink network. And so that will decide who is able to process transactions and therefore collect fees. So it's going to drive these node operators to collect as much Link as they can in order to process more transactions, thereby collecting more fees. So that's a basic synopsis of what I do a deep dive into in my Chainlink video that I'll post a link to in the description below. So we're going to do a price analysis for Chainlink today. We're going to look at where we're sitting at right now. We're going to look at support and resistance levels that are very likely to form for the asset going forward. And finally, and most importantly, in my opinion, we're going to look at some of the changes in the network that we're already starting to see just with the announcement of Chainlink staking. So we're going to start doing this by looking at Chainlink versus the US dollar. And all we're doing here is looking at the drawdown from the all-time high. So right now we're sitting right at $7. And this metric that we're looking at down here just shows us how far we've come down from the all-time high. You know, all the metrics that we look at today are available on the Discord channel. So if you're interested in those, you could go sign up for them. They're free there. So this shows you how far this has come down from the all-time high. And you can see that right now we're sitting at around 86% off of our all-time high. So Chainlink didn't do quite as well as a lot of other assets in the, quote unquote bull market phase of this market cycle. But that was for the fact that Chainlink had gone on such a massive price run during the bearish phase of last market cycle that lots of people were starting to take profits as we were coming into the more bullish phase of this market cycle. So Chainlink already went on a multi-1,000% run, from 2018 all the way through 2020, while everything else was getting hammered. So Chainlink was going on a huge run while lots of other assets were down 90, 95%. So naturally, when that happens, you're going to have people taking profits. Okay, so we find Chainlink is down around 86% right now. Now, one interesting thing you'll note is if we look right here, this is where we're at right now. That's about where we were at in the last cycle towards the bottom. As the market sort of bottomed out for Chainlink, it consolidated for some time. You could see that it basically consolidated right in this range here from around 30 cents all the way down to around 16 or 17 cents. Consolidated for about a year, just under a year, and then it took off. Now, I think there are a lot of factors that make this cycle different. So I'm not going to sit here and tell you that just because we were down 86, 87% in the last cycle, that is a reasonable place to suspect that we'll go down to in this cycle. Because if things continue to look bad in the macro picture, you're probably going to see the price continue to fall down some from here. And we'll look at where some of those likely locations may be. So, one of the key tenets of this channel that we always talk about is you want to acquire, if you're looking to acquire altcoins anyway, you want to acquire altcoins that have strong fundamentals. So, it can be somewhat subjective what strong fundamentals actually are. But in the case of Chainlink, I think it's rather objective actually. And that's because the entire DeFi space essentially relies on Chainlink. So, all of these DeFi protocols out there are relying on Chainlink to provide accurate data. If you have a position in Bitcoin, for instance, and you have a liquidation price of, let's say, at the moment, let's say we're $15,000, you need a decentralized source to be providing that data, because if that network becomes compromised, if it has a centralized source of data, you could easily have that price manipulated being sent to the feed, and you could have your assets liquidated. So Chainlink is the infrastructure that forms the backbone of the smart contract industry. And that's precisely why in this last cycle, you saw Chainlink doing this in the bearish phase of the market. You saw its price appreciating. It was making all-time highs back here in the middle of 2019, when many other assets, for instance, were down 80, 90 or more percent. I'm not saying then that we're at the bottom right now and you should FOMO in, but Chainlink is one of the assets which, in my opinion, and I think a lot of more informed investors share this opinion with me, it is one of the assets that has hands down the strongest fundamentals in this space. Now, with regards to Ethereum, Chainlink was honestly smacking Ethereum all through 2018, all through 2019, and then essentially into the beginning and middle of 2020. Chainlink, in fact, if we just look here, Chainlink appreciated during that time about 9,340% against Ethereum. Okay. So now it's lost 82% of that value. But if you go just from back here in July of 2018, Chainlink's up still around 1,700%. So, that's almost to be expected. Anytime you have a huge move against another asset, you're probably going to get a correction eventually. And now we've been in this longer term downtrend against Ethereum. But like we said, we're looking to acquire fundamentally strong assets in bear markets, because ultimately those are very likely to outperform in the long run. In short-term timeframes, we never know. We never know what will happen. But in longer-term timeframes, we definitely believe that assets like Chainlink will outperform. We see the same thing kind of with Bitcoin. Ever since back here in August of 2020, Chainlink has been underperforming Bitcoin. But it's the same type of deal. If we look from back here in July of 2018 up to this point, Chainlink was up around 7,000% against Bitcoin, right? So in the long term, as the smart contract industry grows, I expect that Chainlink will then begin to outperform some of these assets again. So Chainlink almost suffered during this bull run because of its success that it experienced during 2018, during 2019, during 2020. And that was because during this time, who was investing in crypto? It was more savvy, longer term investors. They were the ones in the market back at this time. Then when the retail market comes in, these guys who have been acquiring at extraordinarily low prices, and I mean, we're talking 20 cents, 30 cents, a dollar, they start to dump onto the retail market. So they're dumping onto the retail market as they're FOMOing in. And that's why you see Bitcoin and Ethereum and all these other assets outperforming Chainlink during that stage of the cycle. And right now, we're down around 70% from our all-time high, which we hit back here, which was around 3% of the total Bitcoin valuation. Now, this is the adjusted Chainlink market cap dominance. So this is just looking at the market cap dominance of Chainlink compared to the entire crypto market cap minus the stable coins. So what we see is we actually hit our highest level, so around 2% of the total crypto market cap, and we hit that right here in August of 2020. Right now, we've come all the way down to around 0.4%. Okay, so we've had quite a large bleed. And again, that's sort of to be expected. These assets like this that, perform extremely well back in the bear market, people are going to be taking profits. You have to imagine right now we're trading at $7. And you still have a lot of people holding back at 20 cents, 50 cents, $1, $2, $3. And, they don't know how bad this market cycle is going to get. They don't know how bad the bear market's going to be. You hear everyone talking about the terrible macro conditions, inflation. You have the all these supply chain issues. You have a global conflict with Ukraine and Russia. And so individuals, if look at it from their perspective, if you're holding from $2 or $3, well, you may be suspecting that the price goes back to that level. And so it's entirely reasonable for those investors who bought at those levels to take some profits. And that's exactly what we're seeing. Okay. So you've seen that throughout this market cycle, as we're trading at these prices here, as we're at $20, $15, $10, these people that have been holding from back here, these longer term holders, they're taking profits. And that's an entirely reasonable expectation in a bear market. Now, notice this has made a small turnaround here, though. But we're not going to go and get too excited about this, okay? We've made this move right here where we were down all the way to 0.3% of the total crypto market cap. And we've made this move up to around 0.4%. And a lot of this has been as a result of staking. Notice that it started to move right before staking was announced, right at the beginning of May. And you may suspect that that's probably some insider trading, to be quite frank, because you'll see that it started to move prior to staking even being announced. All right. So while the rest of the market was kind of bleeding a little bit, you saw that Chainlink was actually gaining ground against the rest of the market. And we'll look at some metrics here, which may explain why exactly that is. So the last thing we're going to do before we go on to some of the deeper metrics is look at potential support and resistance levels for Chainlink. Now, right now, we know that we're right at this $7 level, okay? We're looking at this metric here. This is the volume profile visible range. If you're unfamiliar with what this is, this essentially takes each price level and asks how much volume was traded at that level. And the reason that this matters is because statistically speaking, as you have more volume at any given price level, you're more likely to have more holders of the asset at that level. So where we're at now, we need to then consider what's above us and what's below us. Let's start by talking about what's below us, because quite frankly, we all know the macroeconomic situation at the moment. We don't want to just in a predetermined manner say Chainlink staking came out or it's been announced anyway, so everything's bullish, everything's going up from here. Because if the market continues to look ugly, it's very likely that this asset will continue to head down. So this area that we have right in here, where you see very little volume, right in this range here. So we're talking anywhere from around $6 all the way down to, around 475 up to around $5. There's not a lot of volume there. So these are called low volume nodes. In these areas, you tend to see the price shoot through those ranges. And they shoot through the range because there's simply not a lot of holders there. You can think of it as empty space. So anytime that you're in these lower volume nodes that we just discussed, like here, you're just simply going to move through those zones rather quickly. But then once we get into these areas, these higher volume nodes, we usually kind of get stuck at those levels. And that's simply for the fact that more holders leads to more action, leads to more support on the way down, leads to more resistance on the way up. So below us, where is our support? And that is right at around here. And this is between this $3 up to around $4.50. But you'll notice that right at around $3.80, there is a huge quantity of support there. I kind of suspect that based on the fact that staking has been released, we will, and you never want to say never, but I kind of suspect that it's going to be difficult for the asset to fall below this support range. Now, obviously anything can happen. If things start to look really ugly, it's still possible that we do that. But you have a rather significant support level right here, right at around this $3.50 level. So, like I said, you never want to say never, but I think that this is going to offer a quite large area of support. And if we just look at how far down would that be from our all-time high, we're talking at around, to get below that level, that's 94%. And if you want to come down to this next level, that's around 96%. So historically speaking, there's precedent in other, top assets for them to go down 95, 96%. So it's not out of the question that this happens. But based on the large area of support that we have right here, I think it may be difficult, or it may take a while anyway. And it would require the overall picture to look really ugly, because for some of the things I'm going to show you after this. Now, if we were to fall below that range, then there's another huge support area, and that's right at around, anywhere from 275 down to around a $1.90, right? And none of these prices are exact. I'm not trying to sit here and convince you that $3.80 is exactly where the price is going to. That's not how this works. We're looking at areas of probability here. So we're looking at this in a probabilistic manner, all right? And that's it. So it's statistically speaking more likely that there are holders down at these levels. And it either forms a psychological support level or a physical support level based on the number of people in the asset. Right now, in terms of the downside, that's what I'm looking at. Anywhere between $3 to $4.50 if we were to head down. Now, to the upside, it's much less specific, because you sort of just have a fair amount of volume all the way up from, if you go kind of above this $8 level, all the way up to around 27 bucks. There are some lower volume areas, kind of like, this might even be off a bit right here. Kind of this area here might be lower volume, all the way up to maybe around $11. So you could see the price shoot up maybe to around $10 or $11. But overall, if the entire market continues to look ugly, I think it's going to be really tough for this asset to just shoot through and up to, $20 in any sort of shorter term time frame. It would require the stock market and the general crypto market to sort of show some recovery, because you're going to have a lot of people, there has been a lot of buying going on down at $5, $5.50, $6, $6.50, $7. There has been a lot of buying in here. So if we were to get up to $10, you start moving up into $12, $13, where we're seeing this support right now, you're going to run into a lot of resistance, because people are going to be happy to take 100% profit. The Link Marines won't. These guys are holding till 1,000, period. But a lot of other people, they may take some profits in there. So that's just something to consider. It's all going to depend on what happens in terms of the macro picture. Right now, things look ugly. So my bias at the moment is leaning towards something, like this. But I also wouldn't be surprised if we just traded it in this range for some time. Overall, the macro picture you have to have a bearish leaning bias right now, just based on sort of what's going on the global scene. All right. So with all that said, we're going to move our analysis over now, and we're going to look at some of the more interesting metrics for this asset. And we're going to look at who's acquiring right now, because I think this is very telling. Okay, so the first chart we're going to quickly look at is the net position change on exchanges. All right. And so if you see this as green, that means there's net accumulation, or there's net transfer of Chainlink onto exchanges. And that's typically done for individuals either to immediately sell or to position it on the exchange so they can quickly sell at the appropriate time for them. So we're not worrying about that right now, because I'll give you a hint. People aren't moving their Chainlink onto exchanges right now. They're pulling it off. So we're only looking at this. This is times where we're only seeing a net removal of Chainlink from exchanges. What we've seen ever since Chainlink staking was announced was not a large amount of Chainlink being pulled off exchanges. We're seeing the fastest rate of Chainlink being pulled off of exchanges ever. So this is showing us the net position change of Chainlink on exchanges. And you can see that even in prior times when the price was much lower, 50 cents, whatever, 50 cents, back here it was $3.50. We have never seen Chainlink being pulled off at such a rate before. So at the moment, you have, on a 7-day moving average, you have 17 or 18 million Chainlink being pulled off of exchanges per day. And so that's just massive. That's resulting in a massive net position change for Chainlink. All right. So this is a very bullish sign. Now notice, and this is hugely important, because a lot of people are going to misconstrue charts like this. This is not a short-term bullish chart. It doesn't mean anything in the short term. It only means that there is a huge accumulation of Chainlink. Typically, when we're seeing accumulation phases like this, it's being done over the counter, and that will have zero impact immediately on the price. It won't be until there's a supply shock that we see a move in the price. So there has been a small move, and if you look at times in the past where there's been large amounts of accumulation, especially in more bearish phases of the market, it typically is accompanied by a price move to the upside. But it's typically slow, and you don't see the real impact of it until much later in time. All right. Or you may not see it until much later in time. Okay. So the next thing that we're looking at here is the percentage balance change of Chainlink. We're just looking at that same thing, but now we're looking at how much of the Chainlink network is held on exchanges. And this tells you all you need to know right here. Let's look at Chainlink on exchanges ever since back here in February. And notice these huge blocks of Chainlink being pulled off of exchanges. So back here, we're looking at October into November. You had large blocks of Chainlink being put onto exchanges. And that's because people were taking profits as we're going up to $20, as we're moving up to $30, all right? Eventually moving up to $35. You had people pouring Chainlink onto exchanges. Then it sort of leveled out. And ever since then, in anticipation for staking, and for all the reasons I laid out shortly today and in depth in that other video that I have linked to in the description below, you've seen massive quantities of Chainlink being pulled off of exchanges. So we see right here, the supply has gone from around 25% at the beginning of March all the way down to where we're sitting right now at 19%. And to have 6% of the entire supply pulled off of exchanges in this short amount of time is huge. And if you look right here, if you look back to June 7th, you saw at one time almost 3%, over 3% of the entire supply get pulled off of exchanges instantaneously. So that means a huge institutional investor came in, very likely on a over-the-counter trade, and took a massive quantity of Chainlink off of exchanges. And, it may have been an institutional investor, but in this case, it may have also been a node operator, which would technically be an institutional investor. But this is what we're talking about. These node operators know that they are going to need Chainlink in order to continue to be competitive or to dominate in terms of the fee earning when it comes to processing these transactions. Having more Chainlink offers you the ability to process more transactions. So you're seeing that these larger institutional investors and node operators are acquiring as much as they can, and we're seeing it in huge quantities. Now, remember, this is not necessarily going to have an impact on the price. We see it all the time. You see it in bear markets where institutions step in. They're never going to try and time the bottom necessarily. They're going to acquire in blocks at different prices, and they very likely do it increasingly so as it moves into their price target. And that's kind of exactly what we're seeing here. So you're seeing a very regimented acquisition of this asset. So you saw a large purchase right here in March. Then you saw another large acquisition in April. Now, like clockwork, in June, right when staking is announced, you see another huge acquisition. All right. And so you're probably sitting there saying, well, that's probably just retail investors. That's all the Link Marines. Those are the guys buying all that. And this shows you that you're wrong. If you look right here, let's look at Chainlink held in the top 1% of addresses. And notice on the day, June 8th, the top 1% of addresses acquired a huge quantity of Chainlink. And if we go back here, it's the same day. On that same day, June 8th, the top 1% of Chainlink addresses pulled a massive quantity of Chainlink off of exchanges. And you've seen the top 1% percentage increasing all the way back here, all the way back to December, and even farther than that. So these larger investors, they are acquiring at these depressed prices. Now let's compare that to one of Chainlink's competitors. So the first thing we're looking at here is the percentage of the band protocol token banned on exchanges. And right around the time, just shortly before Chainlink was being pulled off of exchanges in mass quantities, a huge quantity of band was put onto exchanges. So you see right here that the quantity on exchanges went from around 2.5% all the way up to around 8%, all the way at its peak up to around 10%. So overall, you see that Chainlink, it's been in a long-term downtrend. We know that Chainlink staking is going to be integral to this asset, and it's a huge component of the tokenomics. And we see that the larger investors are sort of responding in kind, exactly as we suspected they would. Okay, so overall, this is extremely bullish, but it's not going to be short-term bullish necessarily, guys. It may be. I'm not going to tell you the price won't go up, but it's very likely that things like this, especially when you're in a bear market, they don't have immediate price impacts, because the more, these massive price runs that you see, these are typically caused by retail investors FOMOing into assets and, driving the price up to significant levels. When you're in bearish phases of the market, even if you do have huge amounts of accumulation, there's still plenty of link on exchanges for these larger investors to come over the counter and buy from without necessarily creating a supply shock in the market. So the bottom line, what we're saying here, guys, this is extremely bullish in the long run, but not necessarily in the short term. So in the short term, we have to think about this chart. We have to come back to this chart and consider the fact that there is potential that we move into these lower price ranges. But the good news is, in these lower price ranges, you're seeing that we have a ton of support in this zone right here at around 375, and then again down in this zone at around 225. I kind of suspect that we're not going to go below this level, but if we do, then the good news is you have another huge support zone here. Link investors tend to be one of the more savvy sets of investors that I cover tokens for. So I think that they can appreciate the fact that if we come down to these levels, it's simply a buying opportunity. And if we get down, especially down into this level, that's going to be a generational buying opportunity right there. And for the people sitting there saying, oh, Chainlink, it's a meme token, you have no idea what you're talking about, you need to go inform yourself. And you can watch that video that I posted in the description below to do so. So that's it for this one, guys. Until next time, as usual, see you.